So investors, if they were complacent, they wouldn't like to buy put options. So at the moment, we cannot really conclude it is too complacent.
Hello, Gilles, and thank you very much for joining Dukascopy TV today. It's a pleasure to have you back.
Hello, thank you.
And today we're going to let's look at VIX, and it's very low at the moment. Can you talk us through the current situation?
Well, the current situation is quite strange. As you say, the VIX is very low, currently below 9.6. It's close to the lowest point ever. And of course, it's a question if that can last. Or if it is abnormal. Actually, it reflects also a very calm market environment. The realized volatility is also very low, so there's nothing really abnormal, especially if we consider the futures on the VIX further out on the curve. They are much higher, like 16%, which is quite normal. So basically, market doesn't expect a lot of volatility over the next month or so, but a normal level of volatility over, say, 6 months.
Mm-hmm. So does this reflect complacency from traders and investors?
Well, it could be, but the VIX alone or implied volatility alone is not enough to conclude that it is a pure complacency. It is an indicator, and we must be aware of that. That said, if you look at the skew indices, that is a comparison between put option prices and call options, we noticed that put options are not cheap relative to call. So there is some demand for put option, that is protection strategies. So investors, if they were complacent, they wouldn't like to buy put options. So at the moment, we cannot really conclude it is too complacent.
Mm-hmm. And also, so what should we be doing with it then?
Well, the question, of course, is with a VIX that is so low, should we buy the VIX? We cannot buy the VIX directly, but there are some ETFs that would allow us to buy the VIX. However, over the long term, such a strategy is not really a winning trade. As you can, if you look at the prices, it's getting lower and lower. And the reason is when you go into those ETFs, you buy VIX futures, which are higher than the current spot. So there is a roll down effect, meaning that you have a negative drift on prices. So to enter such a trade, you need a short-term view that the volatility will spike. And of course, timing is very difficult. But when we look at the performance of the S&P 500 index since Donald Trump's election, we have something like plus 18%. And of course, the question is, where do we go from here? I don't know. But when you look at the price of put options and implied volatility is so low, those options are very cheap. So it makes total sense for me to buy option strategies, maybe with the maturity for the end of the year, to secure some of the profits we have had on US equities.
Gilles, thank you for speaking with us. It's been a pleasure.
Thank you.
And thank you for watching. And to find out more, head over to dukascopy.tv.